Today on the show, we talk about how to invest globally. And our resident financial advisor says there's a huge misunderstanding on how credit card companies charge interest. And if you're not aware of this, you could get the shock of your life. Stay tuned for that. I'm Edric Mendoza. On the Money begins now. When exactly does a credit card company charge interest rates, especially if you are what they call a revolver? If you don't know the answer to this question, you are likely to get the biggest bill shock of your life. Watch this Salve Says feature to avoid that disaster.
If you're confused about how credit cards work, don't worry. From my years of talking about financial literacy, even a PhD is no guarantee you can understand a product so complicated as a credit card. A viewer asked.
Dear Salve, I would just like to know what is the best credit card for a first-time user like me, Cherry. Dear Cherry, thank you for taking the time to ask about credit cards. Too many people use plastic without even bothering to understand how to use it properly. You're lucky because the credit card industry has evolved through the years into a business that is now much more responsive to what its customers need. There are new products out there that should be on your list of options. First, choose cards that give you flexible payment arrangements. This is an innovation just recently launched in the industry. You can choose whether you pay once or twice a month or even weekly, and that will always be your due date. It will not change. With most credit cards, your due dates happen every 21 days or so, and because of the different lengths of each month, sometimes tracking the exact date can be tricky. You can also choose which dates your due date will fall. I'm excited over these innovations because first-time card users and even veteran users will find it much easier to pay when due dates are on the same day as paydays. One card company even gives you the power to choose how much you want to pay. Again, this gives you flexibility, but I wouldn't recommend stretching the payment period. In fact, I want you to pay your bill in full every month. As long as you commit this to me, then I will have no worries about you biting off more than you can chew. One of the signs that you're in credit card trouble is when you can't pay your bill in full. That means you become what banks call a revolver or a borrower. When you're a revolver, the insidious effect of compounding on credit card debt kicks in. It looks like this. If your due date is the first of the month and you don't pay your bill in full, you immediately get charged with interest on a daily basis on the remaining amount that you're not able to pay. It's like taxi cab fare, pumapatak every minute. Now, if you swipe on day 3, for example, and still don't pay, you get charged interest on day 3, not on the last day of your credit card cycle. By this time, the interest on your remaining bill is piling up and incurring interest as well, plus the interest on your new debt. So the cycle continues. You swipe again on the 6th of the month, and if you don't pay, the whole process restarts. The principal and interest both incur additional interest, and new debt get charged interest on the day you swipe, not on the last day of your billing cycle. All these will give you bill shock, not a pleasant experience for first-time card users, I promise you. These indicate that flexibility in terms is a neat promise, but it's not something you should use. Aside from flexibility in interest card payments, you also need cards that are 1. Convenient for you to pay via mobile phone apps or through the internet. 2. Provide security features like calling or texting you if there are suspicious charges, especially in online transactions. 3. Give reward points consistent with your lifestyle. Mommies, for example, who are the ones to buy groceries, should choose cards that will help give them the highest rebates of 10% in a grocery that they frequent. Stay away from cards that have very high credit limit in the beginning. It will increase in time, and that's a good sign that you're managing your credit card wisely. But since you're a first-time user, better opt for plastic with a credit limit you can manage. For instance, a bank has recently launched a credit card that uses as basis for choosing the credit limit how much money you can afford to pay every month. If you can only afford 3,000 pesos, then your credit limit will become 30,000 pesos.
Another viewer wanted to know about balance transfers, a credit concoction that has intoxicated many balance sheets.
Dear Salve, just want to ask about balance transfer. Is it really worth it? What are the advantages and disadvantages? Glenn. Dear Glenn, balance transfers are tricky little things. They supposedly give you interest discounts and term adjustments, and at the same time, they make your monthly payments easier to manage. However, balance transfers have been the cause of many credit card holder tears. Number one, what most people don't realize is that if a portion of that balance transferred, even if just a portion, is not paid in full during the due date, the interest rate goes back to the original rate plus some. Second, if you're not careful, it creates a false sense of security that you have successfully fixed your credit problem. You haven't fixed it. You have only kept it at bay. The day of reckoning will eventually come. To manage your credit card balance transfer or transfers properly, make sure you include the monthly installments in your fixed expenses every month. Third, the effective interest rate is complicated to compute. Not even the geeks over at the central bank can figure out the exact level for most banks. What I can say, however, is that in the advertisements, they seem lower than the real thing. So be careful.
Credit cards are a wonderful innovation of the 21st century. They are the face of convenience. Plus, they can give you lots of free air miles if you know how to use them. But all of those perks will never be worth their weight in diamonds if you pay interest every month.
Salve, thank you for that preventive tip. Very useful. Coming up, we'll get tips on how to invest globally. Stay tuned. You're watching On The Money. For some investors, the investment opportunities here in the country can be limited. After mutual funds, stocks, bonds, real estate, there's not much that you can do to help yourself diversify, unless you go global. Our guest today, Mia Quitalig, Chief Investment Officer of My Investment Avenue, will talk about global investments. Thanks for being here, Mia.
Thank you.
Can you tell me just briefly first, what is My Investment Avenue? What do you guys do exactly?
It's actually an investment management and education company. So we manage investment funds. We deal with institutions, and as for the retail investors, we have to channel them through a cooperative. But as for the investment education part, I do the trainings myself for options trading particularly. So that's options, derivatives in the US stock market.
How would you define global investing?
If you invest not only in, particularly for example, stocks in the Philippine stock market. So if you go out, some of us already are exposed to the foreign exchange market. So we do forex trading. And some of us also invest in stock markets of other countries, but investing on the stocks themselves.
Directly?
Yes.
Okay.
And there's this other opportunity that I want our people to know, that they can also invest in derivatives, which we call options in the US stock market.
Okay, and that becomes part of the education you give.
Yes.
Right? Now, to be very clear, you said these items, if a person were to invest in these global investments, as an individual, they go through a co-op. But as a company, they can go through My Investment Avenue.
Yes.
As a firm. Okay. What is your advice to people on how they will know whether they are ready for this type of investing?
Okay, the determining factor for me of your readiness to invest in the global markets is if you are intent on diversifying.
Okay.
Some people want to master first or fully understand first one type of investment instrument before they go on to another.
Sure.
Some actually just want to add in to their portfolios every time they see that this investment is looks profitable or promising.
Okay. You're saying that the person looks at it as diversification, but in terms of the risks involved, right? Because when you diversify, you really want to look at risks.
Yes, yes.
How risky is global investing?
I'm an advocate of options trading in the US stock market. There are certain characteristics of options trading that are beneficial and makes it less risky compared to investing in stocks, whether here or in other international markets.
And how is that so?
Because there is a certain type of option that it makes it possible for you to gain even if the stock prices are going down. When you trade options, there's a way for you to know the probabilities before you enter the trade. And you can ensure that before you enter the trade, make sure that the probabilities of those, for example, is 70% for you to gain and 30% for you to lose. Okay, so in that case, it's like 2-to-1 reward to risk ratio. So if that is the case and you have, let's say, 10 trades, okay, and you lose on 6, so that makes it -6.
Sure.
Okay, and for the 4 winning trades, if the case is 2-to-1, that will become 8. So in effect, you
won
have
8.
+2.
Lost 6. Positive
Yes.
2. I see. And I'm going to probably spin off into a whole options 101 interview with you separately.
Yes.
But let's go back to the total pie. So that's one way of investing in the global
Yes,
market,
yes.
right? And you did mention other areas. Are you able to generally classify people who are ready for this? For example, someone who is starting out in investing, young, fresh grad, starts their job. Would you advise them to go into this type of global investing?
I would say they can. I remember one particular quotation that Robert Kiyosaki mentioned, that investing is like driving a car. So if you don't get educated, it will be very risky.
Sure.
Okay, so the purpose here is to, when you get into a certain type of investment, you have to educate yourself
Sure.
about that investment.
What's the general learning curve for options? Because it's not familiar to Filipinos, right? It's not available
Yes.
here. So would you say that the learning curve for someone starting out would be fairly steeper rather than, hey, here's a mutual fund, here's a pooled fund, here's a direct stock investment that you could opt for?
Yes. There are trainings that are being conducted in other countries like Singapore.
Sure.
And this is the first time actually that options trading is being taught in the Philippines.
Sure.
And what I did was to simplify the strategies so that anyone can easily understand them and apply them for options trading.
Okay. So to my question of how steep is the learning curve, you're saying it's just like any other investment in the Philippines?
Yes, and it depends on the person himself or
And
herself.
how many percent of a person's portfolio would you recommend that they put into global investing as a general rule?
As a general rule, I would say they can start with 30%.
Okay.
And then if they see that it is something that they really want to get into, more of into, they can increase that.
Okay. So tell me about the worst case, because you did share with me a bright spot, 50%
Yes,
return over
yes.
4 days because of the 2:1 ratio. What is the
Yes.
downside? Worst case scenario, person puts in 100,000.
Okay.
What can happen?
Because of the technology nowadays that you can trade online through the internet, there's also a certain technology that is, I think, is also available with our online trading platforms,
Sure.
that you can put a stop loss.
Okay.
Okay, so with that,
Like Forex?
Yes.
Okay.
So you have that certain protection that will limit your losses.
Okay.
So the same thing is true with options.
Okay.
Plus the added factor that you can choose which trades to take.
Right. Some of my guests have actually said for Forex trading, you only want to put about 10% because it's very volatile.
Yes.
Forex. Now, that's part of the global investments you did mention. But taken as a whole, would you say that the worst case, as you were trying to explain earlier, can actually be you lose everything?
I wouldn't say that you can
In a
lose
short span
everything,
of time?
because you have to protect yourself. You have to monitor, of course, and of course you won't let your entire capital be lost.
But it is possible, theoretically. If you don't monitor it
Yes,
properly, you
just
can
like
lose everything.
any other
Okay,
investment.
just to be clear. And it can happen in a quick span because of the movements
Actually,
in
in
the market.
Forex, it's faster.
Very good. Okay. Tell me about ways to help monitor this fund. If you were to get involved in this, you did say it's daily. So is it like trading in the stock market where you follow the price every day, you track the trend so you can put in or buy and sell? Is that the general mindset also as far as monitoring these funds are
No,
concerned?
in the case of options trading, you just have to place your trades on a certain day. For example, for the short-term strategies that I mentioned, you will be in the trade for a maximum of 4 days. So, for example, you will enter on a Monday and then you exit on Thursday. So, in between that, since on Monday, you're going to place your targets and your stop loss. And if your target is not reached or your stop loss was not triggered, you have to exit manually on the 4th day. So those are the only times that you have to be there.
I see. In between those 4 days, you don't watch it?
Yes, you don't.
Really? Okay,
It's
you
better
just wait.
if you don't.
Okay, very interesting. Like I said, we'll do probably a whole other segment. And how does a person get started? Can you give me a step-by-step if they wanted to access these global funds as a retail?
It's easy for someone to just open an account with a certain online trading platform.
Okay.
Similar to what we have now here in the Philippines, we have CityTech Online, and I think there's other online
Platforms as
trading
well, yeah.
platforms. So there are also online trading platforms that even if we're in the Philippines, we can trade online in any of the, not just the US stock market.
Okay. So you would just have to access that after attending a training?
Yes.
Okay.
Yes.
What is the minimum amount to get started with global investing?
For options trading particularly, for the recommended online trading platform, for me is you can start with $2,000 US.
Okay. And then for Forex and the other types?
That's cheaper.
Cheaper.
You can actually start with $100 in Forex.
Okay, good, very clear. We'll answer some questions from social media after this short break. Stick around. You're watching On The Money. Welcome back. Still with us is Mia Quitalig, Chief Investment Officer of My Investment Avenue, talking about investing globally. And one added question I have, Mia, before we go to the viewers is, what time does a person have to trade if they use these platforms?
If you are trading with the US stock market, 9:30 a.m. is the opening time.
In the US?
In the US.
Okay.
So that is 9:30 p.m. our time. So
pros and cons?
For those that are or that intend to keep their day jobs, not trade full time, so they can still do it without leaving their jobs, and they trade at night, and it won't take so much of their time naman. They don't have to stay until 4 a.m.
How much time will it take?
30 to
an hour?
45
Oh,
minutes.
okay, good. But if
Less
you're
than an
exhausted and you don't have that time, then I think you choose, right?
Yes, that's
okay.
the disadvantage.
Correct.
There are some people who are not
Yes.
evening people or
Yes.
night people
Clear.
like
Okay,
me.
Mia. Yeah. This is from Jig via Facebook. Is it really good to diversify globally now that the Philippines is performing better than most markets? That's a good question.
I'm not sure though, when Jig mentioned that this is the Philippines is performing better than other markets, what his time reference was, because lately our stock prices went
Erratic.
down. When you say that you want to diversify, the reason you are diversifying is because you know or you understand that one market or one particular investment instrument that is performing well now will not always be performing
Sure.
well. That is why you want to diversify,
Sure.
so that when that happens, you have another investment instrument that you can rely on to compensate for it.
Good. Okay. This is from Juani via Facebook as well. How do you handle foreign exchange risk when you're investing globally? We touched a little bit on that.
Yeah. When you're investing globally, you will actually deal with foreign exchange risk or differentials at two major points. One is when you convert your pesos to buy the currency that you want to trade with
Sure.
in your global investments. And then during the time that you are invested globally, you don't have to worry about the exchange risk. Then the
Why?
other time,
Why?
because if you're trading in dollars and gaining in dollars, it's the same thing.
But if you're losing?
If you're losing, it's the same thing.
Okay.
So the only other time that you will be concerned about foreign exchange risk is when you pull out your investment. So if you are gaining at that time, it won't be much of a concern because hopefully your gains are enough to compensate for any foreign exchange loss. Okay. The other thing is if you're losing, if you lost and you now have a foreign exchange loss also, so that's double.
Correct.
But not to worry, Juani, because that has a low probability of happening naman, that you have a real loss from your investments and you also have a foreign exchange loss. Because like what I mentioned, recently what happened in the US stock market is the prices went down. But in my case, I made money with options trading. And if you're aware of the foreign exchange now, you can exchange your dollars for more pesos, actually.
Okay. Any parting thoughts or insights for our viewers?
Probably what I can tell our viewers is if you're interested to invest globally, it would be a good way to diversify. But again, you have to get educated. You have to fully understand what you're getting into.
Very good. Investigate before you invest.
Yes.
Thanks, Mia.
Thank you, Edric.
That's our show today. I'm Edric Mendoza. Send us your money questions by email, Facebook, or Twitter. And to view portions of this interview, visit our website, anc.abs-cbnnews.com. Or for the full episode, go to iwanttv.com.ph or log on to tfc.tv. Join us again next time as we bring you more tips on how to save, invest, and manage your money. Thanks for watching.